Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Podcast, Monday, November 29th, the morning after the night before, so to speak. Let's go to Sydney, Australia. Peter McGuire, CEO of XM Australia, although the somewhat epicenter of this new COVID variant came out of South Africa, it seems Hong Kong is also in the crosshairs here, Peter. But nonetheless, is this a buying opportunity?
Well, good afternoon, Sean. I'm just noticing WTI is up the best part of 4% from what we saw in building on Omar's comments. So it's had a big reversal. We've got the Nikkei down 1.6%, but that's about the largest fall as far as equity markets in Asia trade today. Everything else has bounced. US dollars come back a little bit. We're running it at that 96.20 handle, well off that 97 high that you saw a couple of days ago. So, yeah, giving back a little bit. I wouldn't be surprised to see a further push up over the next 6 to 8 hours and leading into what we see in New York tonight. So it was a short day Friday. Everything was spanked down, big falls. And I'm just seeing this Angelique Coetzee, the South African doctor. She spoke on the BBC, said there's nothing to worry about. It's only mild symptoms. So if you're putting that into some context, maybe there's nothing to worry about and time to be long.
Well, Peter, just to come back on that point. I mean, whatever the realities are of this COVID variant, it seemed this market was more than willing to drop dramatically very quickly. Friday after Thanksgiving, but nonetheless not in Australia, not in London, not in Dubai. And this market was very willing to drop $10 on oil, a bunch of percentage points on most equity markets. What does that tell you about the current sort of position of this market, that it is that fragile at this moment?
Yeah, a fragility, Sean. It is very, very overbought in a lot of ways. And I think that the sentiment is one of fear. So that greed, as Omar said, greed or fear, at the moment it's fear. And that really, I think, spooked everyone. It was a short day, 1 o'clock close for the New York equity markets. The NYMEX traded a little bit longer, and then that whole everything just capitulated, as we know. So yeah, fear drove it down. No one wants to go back to. We all understand where we've been the last 18 months, and that was the issue that really swept everyone off their feet.
Peter, the big issue this week, of course, OPEC trying to digest all of this information, no pun intended, and they were already facing somewhat of a difficult task with the SPR release last week. Seems like ancient history now. But what do you think OPEC does? What should they do at this moment, absorbing this information?
I think, Sean, they've got to sit on their hands to just see where we go over the next 48 hours. If it bounces strongly and say it rises 6 or 8% today, which it could well do because you're up 4% already, then they'll probably just maybe take a deep breath. Those large volatility swings takes everyone. It really changes the footprint as far as clarity and thoughts and what the next moves could or should be. So I think it's just, take a deep breath. Let's see what happens over the rest of the next, 3 to 4 trading sessions, and then maybe make a decision. Because, when you start taking off 13% in one trading session, that's just not normal. That's very fear-led.
How does it guide you, Peter? Obviously, the sense of outlook that demand erosion was going to come on the back of COVID. Of course, there's already a decrease in aviation fuel, however which way you cut the cake, with hundreds of flights that were going to be flying today or not flying today. So there's already some tangible impact there. The scale of it, we'll see where it goes. But from a demand point of view, the collapse in price, $10 would be, I don't know, equivalent to 2 million barrels in terms of demand destruction. What are your thoughts on where the demand weakness is? Because in Asia, it's coming back strong.
Well, it is, Sean. I mean, if you roll this forward and we're still having this conversation on the 20th of December and oil's at $50 and you go, Pete, what's happening as far as demand destruction? And all the flights have been cancelled and the world's really unraveling at an enormous rate, then that changes our whole logic to an argument. So it's so hard to forecast. We set that trade up on Friday, and I just building on what Omar mentioned, the Nikkei was so heavily spanked down to 2.7% on Friday. That set everything up as far as Europe, and then all of a sudden it jumped into the UK and then naturally the US markets, and they just capitulated, and certainly with crude. So, that's where those traders need, just from that footprint, need to look over that 24-hour window and be conscious what's happening in Asia, building into Europe, then naturally into the US. And at the moment, I'd say that we're on probably a little bit of a rebuild, and prices could strengthen a little bit from here.
Peter, does it feel that way in the markets, that this thing has been absorbed, the shock has been absorbed, and when the US opens, we'll see a rally perhaps?
I wouldn't be surprised, Sean. I mean, if you're looking at crude being the starter, it's up 4%. Asia's choppy. Yeah. The only one that really I'm worried about is where the Nikkei is at the moment, down around about 1.6. And it was probably a little bit exhausted, that Tokyo, that Japan market anyway. So I wouldn't be surprised to see a continuation as far as strength across that Eurozone today, as far as equities building into tonight. And yeah, Wall Street, I wouldn't be surprised it has a little bit of a bounce to the upside. I'm not sure, you can't pick a number, it's fortune telling, but the crude story could be the start, and a little bit further weakness as far as that US dollar. So some strength building into equities.
Your thoughts on what OPEC will do, should do? Ultimately, you suggest that they should hold on their current agreement to go 400,000 barrels a day per month, which is sort of the sort of maintain the current posture. You're saying perhaps they should suspend that, Peter?
Well, maybe not necessarily suspend it, Sean, but push the meeting back for a few days. After you've had a 13% wipeout, it really takes the oxygen out of everyone's lungs. And they need to really, gasp as they're held underwater there and say, right, get a breath. Let's have a closer look at this and see what happens as far as markets. If you only got to fall another 7% and you're in, bearish territory, the South African doctor's saying it's nothing to worry about. The media's grabbed hold of it. I'm not sure where it moves from here. It's upsetting a large contingent of the market, and we've just got to take a consideration what that fear factor built in, and does it bounce from here? So that's where I'm just saying maybe OPEC take a bit of a deep breath, give it a few days, postpone a meeting or a decision, and just push it off.
Peter, if you're the Fed and you're sitting on your tapering strategy, how does the events of Friday possibly impact that thinking, do you think?
I think the first point is, Sean, they've got to get inflation under control. So probably they do have to look at, continuing that taper mantra.
I mean, ahead of Friday, there was increasing noise about accelerating the taper.
Yeah.
Does Friday reconsider that?
Maybe it does, but the story naturally is, how do you pull back that the inflation story? And everyone's in two minds. You've got the Eurozone sitting at about 4.6% November to November, that yearly number, which is quite frightening for Eurozone. And if you're looking at, you put all the measuring tools in there that you used in 1980, if you use those for the current figures in the US, you'd have inflation running at about 14%. So they know damn well that they've got to contain it and bring it back. Wage rises is what everyone needs. I don't know if everyone's getting, just because of the spending power of the wallet and the purse. So it's probably, onward and upward for rates and the projection of that over the first quarter next year, and continue on the taper talks. These are very, very unusual times. I don't need to herald that. It's just this sort
of dramatic event of a sort of the threat or scare of COVID, but more the reality of the reaction, right? If governments shut down economic activity, that nearly acts like a tightening of monetary policy.
Absolutely right. So there we are, and it's just, I think as the next matter of weeks roll forward, we'll get a better indication where we are in 2 weeks' time. If this was just a minor hiccup, does make it look good. Just throwing a weird one in there, but Biden was really the only one that came to that rattled the bucket as far as SPR. Everyone said, well, the market went up. Well, actually, the market went down if you use that for Biden. So maybe it was, there was something hidden there, Sean.
Peter, your thoughts the Monday morning, Asia, China, China is also looking still an uncertain place at the moment in terms of it's got its own lockdowns, very little flying in terms of internal provinces closed in, ports delayed. How do you see the overarching China demand picture over this period into the new year and the Chinese New Year, which would typically be a very peak demand window for oil at least?
Well, exactly, Sean. The other side, of course, is the Evergrande story, and that hasn't really come to play that symphony out. There's a long way to go yet. So that whole property sector, what's happening across from a demand picture for property, we know it's the largest property market in the world. I think it's going to be a very, very tough 2 months leading into that Lunar New Year, the early part of February. I think December and January could be fairly tight for the Chinese market. And if they have further lockdowns and that, ratchets up from here, it's not going to be a pretty sight by the time we hit the Lunar New Year. So, yeah,
which of course is a big picture that OPEC looks at. OPEC plus China is their biggest customer.
Absolutely, in travel demand and crisscrossing the world, everyone going home from all over the place. So I'm not sure whether that's going to materialize. We'll have a better picture over the next couple of weeks. First off, the South African variant, and then naturally the next part of it, where it rolls from here as far as market sentiment.
Your thoughts, Peter, on how this event might impact China's policy? My sense is that it will reinforce their lockdown mentality, their zero infection tolerance.
Well, they probably will, Sean, that top-down approach, and that no doubt will be the strategy moving forward. So we're all sitting here worrying. I think every nation is how this rolls forward. God help us if we have to go through lockdowns again and all of that economic carnage that everyone's lived through. So yeah, it's been very, very bleak for the man on the street. A lot, and inflation out of control, earning power, and many components into the big economic cheesecake that are looking very flawed at the moment.
Anyway, that's a wrap. It's already Monday morning. Get back to work. Omar has to make some money to pay for that chunky watch on his wrist. Let's go. Peter McGuire, thank you so much. Omar Najia, thank you as always. Dr. Charles, have a great day. Catch up later. Thank you.
Thanks, Sean.
Thank you.
Cheers, guys.